Hey everyone, welcome back to Corporate Decoder. Today, ALV just filed their 8K for the 17th of April, 2026, and I am seeing signs of a strong quarter. Quick note, this is not financial advice, just my take on public filings for educational purposes. Autoliv is reporting solid results, and the market seems to be reacting positively. Let's dive into what this filing really tells us. So, this is an 8K filing, which is basically a report for companies to announce major events that shareholders should know about. Think of it as a way for companies to keep investors in the loop on important news that isn't necessarily part of their regular quarterly reports. This particular filing announces Autoliv's financial results for the first quarter of 2026. The main point here is that Autoliv, or the company as they call themselves in the filing, put out a press release on the 17th of April announcing how they did in the first 3 months of 2026. They're highlighting several financial measures that go beyond the standard accounting rules, what they call non-GAAP measures. These include things like organic sales, adjusted operating income, and adjusted earnings per share diluted. Basically, they are tweaking the numbers to show what they believe is a clearer picture of their core business performance, removing certain one-time or unusual items. Management believes these adjusted figures are important for investors to truly understand the company's performance. They point to their prior annual report and this press release for a deeper explanation of why they use these adjusted numbers. This press release, which is included as an exhibit, is where all the juicy financial details are. While the filing itself doesn't show the numbers, it directs us to that press release. And we've seen some headlines saying Autoliv Inc. stock, ticker ALV, surged about 9.8% on strong Q1 26 revenue and earnings. Other headlines mention Autoliv rallying after seeing strong results in Asia in the first quarter. This suggests that the market is taking the news from this press release very well. For context, Autoliv is a major player in the auto parts industry. They have a market capitalization of around $9.4 billion, and they employ almost 58,000 people. Their stock is traded on the New York Stock Exchange under the symbol ALV, while this specific filing does not contain the detailed financial tables. The associated press release Exhibit 99.1 is the place where those numbers live. Based on the accompanying news headlines, it is clear the company reported a strong first quarter. The market's reaction, with the stock jumping nearly 10%, confirms this. Autoliv reported on its financial results, and what is really interesting is how they are presenting these numbers, focusing on adjusted figures to highlight their core operations. This is a common practice, but it's always important to look at both the adjusted and the standard GAAP numbers when available to get the full picture. The focus on strong results in Asia is also a key takeaway, especially as some reports mention a drop in overall vehicle output. This suggests Autoliv is navigating the industry landscape effectively, with different regions contributing to their success. Looking at the broader market context, a 9.8% surge in a single day is a significant move for a company of Autoliv's size. This kind of jump often indicates that the results were not only good but likely beat market expectations. Companies that provide safety equipment for vehicles, like Autoliv, are often seen as resilient, but they are still tied to the automotive industry's ups and downs. The fact that they are reporting growth, particularly with Asia outperforming, suggests a strong demand for their products and perhaps a successful strategy in key growth markets. The mention of organic sales implies that their growth is coming from selling more of their existing products or expanding their market share, rather than just through acquisitions. The adjustments they've made to their financial reporting, like adjusted operating income and adjusted earnings per share, are designed to smooth out the impact of things like currency fluctuations, restructuring costs, or other non-recurring items. This gives investors a clearer view of the underlying profitability of their business. For example, if they had a large one-time expense in the quarter, the adjusted figures would exclude that, showing a stronger operational performance. It is like looking at the engine of a car without considering a temporary scratch on the paint. The fact that the company explicitly states these adjusted measures should not be viewed as a substitute for GAAP results is a good sign of transparency. They are acknowledging that these are supplemental views. The history for companies in the auto parts sector can be cyclical, tied heavily to new car sales and production. However, with increasing regulations and consumer demand for advanced safety features, companies like Autoliv that focus on innovation in areas like airbags and autonomous driving systems can potentially see sustained growth. We saw DuPont Capital Management Corp make a new investment in Autoliv, which often signals confidence from institutional investors. Major holders like Sevian Capital II, GP Ltd, and BlackRock Inc. also suggest a solid institutional backing for the company. When we compare this to other companies in challenging economic times, Autoliv's ability to report strong growth, especially from a key region like Asia, positions them quite favorably. It suggests a robust business model and effective execution in a complex global market. The significant share price increase following this announcement is a testament to the market's positive interpretation of these results. Now, looking at these results more broadly, Autoliv appears well positioned in the market. The strength in Asia, a region often driving global automotive growth, is a particularly positive signal. While adjusted earnings are helpful, I always keep an eye on the overall cash flow generation, which indicates the company's ability to fund its operations and growth without over-reliance on debt or new equity. The risk I am watching is how sustained this growth can be, especially if there are broader economic slowdowns or disruptions in the automotive supply chain. What I am actually looking for is consistent growth in organic sales and maintaining healthy margins, both GAAP and adjusted, over the next few quarters to confirm this isn't just a temporary blip. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Check out the Discord in the description.